talk about some of the specific proposals and changes that are to be expected. We've divided these into big substantive categories that tend to track the kinds of things that we think about. The Tax Cut and Jobs Act individual provisions, which Peter will talk about, are kind of background to context for everything that we do and everything that you all have to think about when you're paying your taxes and doing your planning. But then numbers 2, 3, and 4, really numbers 2 and 3, estate tax, business, capital gains tax, there are some potential either changes or extensions that are maybe different from what you'd have expected if the Democrats had won, that will significantly affect the opportunities to reduce your taxes going forward. So, Peter, you want to take on the number one there?
Yeah. So to address Davey's question on SALT. So SALT is the state and local tax deduction. It used to be unlimited. So if you lived in a high tax state, you could just claim like hundreds of thousands of dollars of federal deductions for your state income tax and property tax. In 2017, the Tax Cuts and Jobs Act imposed a $10,000 cap on state and local tax deductions, which was controversial, but it raised a lot of money and helped to address the deficit concerns at the time. And so there's been talk about loosening those restrictions. Most people think that Republicans basically have an internal agreement on SALT, which is they're going to keep the $10,000 per person cap, but for married couples will get $20,000. So instead of it being $10,000 for a single person and $10,000 for a married person, it's going to be $10,000 for a single person and $20,000 for a married couple.
Yeah.
But we'll see if that's actually how much that's really been worked out. But that's what people think that the tentative deal is.
And then more generally, there's a lot going on here having to do with the potential for changes in the marginal rates, potential individual credit changes. We're talking about things like child tax credit, which was actually the subject of pretty robust debate on both sides during the election season. Standard deduction may change, itemized deductions, AMT. These are all in a suite of what I think of as things that affect the rate that you're paying on your taxes. And then there's kind of bigger structural things that we'll get into. The first one, and we'll just hit on this very quickly because we're going to go deeper on each of these, is the estate tax. Just in general, as I think you all know, there's an exemption that every individual taxpayer has where they can give away a certain amount of money without being subject to estate tax. That number is the subject of some kind of political football. We're going to talk about business and capital gains taxes. If the Democrats had won, there may have been more of a likelihood that capital gains rate might have changed, probably not going anywhere now. But business tax and deregulation are a pretty robust subject right now on things like bonus depreciation and opportunity zones, which again, we'll talk about in more depth. Just in the interest of time, I don't think we need to go too deep on the kind of more slightly out there proposals like no tax on tips and overtime. Peter, am I right that all may or may not happen? It's not really likely to have any broader impact on.
Yeah, I don't think there's going to be a lot of tax planning to do around like no tax on tips, for example. I think that the no tax on tips one in particular got so much media attention on the campaign trail. Republicans would probably have to do something on that just to, otherwise people will be asking them why they didn't exempt tips from taxes.